Welcome to The Deep Dive. We're here to break down corporate earnings calls into insights you can actually use. Today, we're tackling Krystal Biotech's Q2 2025 call from August 4th. And this one was interesting, looked like a great quarter.
Right, a really strong quarter on the surface.
But the market reaction, a bit cautious, surprisingly.
Yeah, it's that classic disconnect, isn't it? The numbers look fantastic, but the stock tells a slightly different story.
Yeah.
And that gap, that divergence between the reported financials and how the market took it, that's what we're going to unpack for you. It's often about those qualitative things.
Exactly. So let's hit those headline numbers first because, wow, they were pretty impressive. Krystal beat on both top and bottom lines for Q2. GAAP EPS, that came in at $1.29.
Which handily beat the $1.22 consensus, right?
Yeah, easily beat it.
And revenue, $96.0 million. That also sailed past the $92.2 million analysts were expecting.
And that's a big jump year over year, too, 36.6%.
Huge jump. And what's really striking, I think, is that their main drug, VYJUVEK, was responsible for all of it.
Yeah.
Every single dollar. $96 million in net sales, just from the U.S.
That's incredible focus.
And since it launched, Q3 last year, VYJUVEK's pulled in over $500 million cumulatively. $525 million.
Wow, okay. And operationally, they kept that super high gross margin, 93%, which, I mean, that says a lot about their manufacturer.
It really does. Very efficient. Net income was solid, too, $38.3 million. And they're sitting on a big pile of cash.
Over $820 million, right? So purely looking at the numbers, everything looks great, firing on all cylinders.
It absolutely looks that way. Strong beat, great margins, tons of cash. Yet, like you said, the market reaction was hesitant, cautious. The stock took a hit right after the call. And that's why we're diving deep here, because it really shows how important it is to listen between the lines. You know, it's not just the numbers reported, it's what the market hears in the commentary.
Okay, so let's unpack that paradox. What was said, or maybe how it was said, that seemed to spook investors despite that strong quarter? Let's start with VYJUVEK in the U.S. Management did say growth picked back up in Q2. They pointed to patients restarting treatment after pausing.
Right, getting back on the drug. And also the impact of expanding their sales team.
Which they're still building out.
Exactly. They were clear that the full benefit from those new hires, that's going to take a few more quarters. Training, getting them out in the field, all that. But importantly, they've got over 575 reimbursement approvals locked in for U.S. patients.
That's key.
And compliance patients actually getting the drug was strong at 82% at the end of Q2. So the uptake fundamentals look good.
Okay, but here's the part that probably caught everyone's attention and likely drove that market reaction. Krystal specifically guided for Q3 revenues to dip sequentially.
There it is.
Yeah. They said it's due to expected summer treatment pauses, but then they projected growth returning in Q4.
Driven by what, a bigger patient funnel and the sales team efforts kicking in more?
Exactly. So a temporary dip, then back up. That was the message.
Right. And that forward-looking bit on Q3 seasonality, that seems to be what the market latched onto. It just overshadowed the Q2 beat entirely. Investors just don't seem to like any hint of nonlinear growth right now, especially in biotech.
It seems that way.
They also mentioned their U.S. patient targets. On track for 720 patients by early next year.
Which is a slight delay, right? Wasn't the original goal sooner?
Yeah, slight delay from hitting that maybe this September or October, but still aiming for the full pool. They've identified 1,200 patients.
Yeah.
And eventually they hope those 3,000 or so undiagnosed patients out there.
Okay. And for the long-term models, they talked about a steady state usage.
Right. 26 vials per year per patient on average.
Yeah.
That's assuming the patient mix kind of stabilizes between the recessive and dominant types of DEB.
DEB being dystrophic epidermolysis bullosa, that rare skin disorder VYJUVEK treats.
Exactly. And understanding that mix is important because right now, the recessive patients, they use the drug much more consistently. The moderate to mild patients, they're the ones more likely to pause and restart treatment. So they contribute more to that seasonality, like the Q3 dip they're forecasting.
Got it. So it shows patient behavior isn't always a straight line, even in these rare diseases.
Precisely.
Okay, so that's the U.S. picture for VYJUVEK. Strong, but with some, let's say, anticipated bumps. What about the global side? Management sounded pretty bullish on the cusp of a global expansion.
Yeah, and that wasn't just talk. They have a real plan, a sequenced rollout. Europe's up first, Germany launching in Q3, France in Q4. They think there are over 500 patients in each country.
And they have teams ready.
Teams are in place, ready to go.
Yeah.
Germany should see its first commercial patient treated this month, actually, so it's happening now.
Wow, okay. And Japan, that approval came through recently too.
Huge milestone. And the label in Japan is really good. Allows home and self-administration.
Which is a big deal for access.
Massive. And no genetic test needed for diagnosis either. Another barrier removed. They expect launch before year-end 2025.
So contributing meaningfully to revenue in 2026, probably.
That's the plan. So this global push, especially into potentially higher margin markets,
Yeah.
and with that easier administration, it's a really strong long-term growth story.
Diversifies them beyond the U.S. too.
Absolutely. Management clearly sees this as building a much more robust financial foundation, maybe smoothing out some of that quarterly noise over time.
Makes sense. Okay, moving beyond VYJUV, Krystal isn't just a one-trick pony, right? Their innovation engine seems pretty active. The pipeline updates were interesting.
Definitely not a one-product company. The pipeline is key for long-term value. Like in cystic fibrosis, they're expecting interim data for KB407 by year-end.
That's their gene therapy candidate for CF.
Yeah, and positive data there could really validate their whole vector platform for lung diseases, which is a huge area.
And alpha-1 antitrypsin deficiency, AATD.
Similar story. Repeat dose data for KB408 also expected by year-end. Success there opens up another major market beyond skin diseases.
They also talked about eyes, right? Ocular gene therapy.
KB803 just dosed its first patient in a phase 3 for corneal abrasions. And they started a new phase 12, KB801, for neurotrophic keratitis.
So expanding into ophthalmology too.
And then there's oncology. Their inhaled program, KB77, showed a 36% objective response rate in non-small cell lung cancer patients who had already failed other therapies.
36%. That sounds pretty good for tough-to-treat patients.
It's compelling, yeah, especially as a monotherapy. They're doing combination studies, too, which could boost that further.
And we can't forget the aesthetics piece. Their subsidiary, Jen.
Right, the potential sleeper asset. They had positive results for KB304, a combo therapy for skin aesthetics, planning a phase 2 for décolleté wrinkles.
Which sounds niche, but that market is massive.
Exactly. And the plan is to potentially finance and spin out June as a separate company by mid to end 2026. Could unlock a lot of value there.
Interesting. And where's the R&D money going mostly?
Heavily weighted towards oncology right now, which makes sense. Cancer trials are expensive. But it shows they're serious about advancing those programs towards bigger, controlled studies. That's where the real value inflection often happens.
Okay. So pipeline looks busy. And back on the operations side, that discipline you mentioned, combined with the cash, that paints a solid picture.
Yeah, that 93% gross margin is just, well, it's remarkable. Shows a really lean manufacturing setup, critical for gene therapy costs, and having over $820 million in cash. That gives them huge flexibility. They can fund all this pipeline work without needing to rush out and dilute shareholders with another stock offering anytime soon.
Which investors always appreciate.
Definitely protects value.
So pulling it all together, management sounds confident in the long game, right? The multi-year growth for VYJUVEK, the pipeline potential, even while admitting, the path won't be perfectly straight up with things like summer seasonality.
It's exactly. Their vision seems clearly focused on significant long-term expansion. But the market, it's zeroed in on that Q3 dip. That immediate negative reaction happened despite the strong Q2 and that whole compelling long-term story.
Yeah.
And it just highlights that theme in biotech right now. The market is super sensitive to any hint of near-term wobbles. It needs more than just a beat. It wants a beat and raise.
It's like they heard one slightly off note and ignored the rest of the symphony. The stock had actually done well year to date, up 25% until mid-July.
Right, boosted by those Japan and EU approvals.
But then saw a lot of profit taking. And compared to the broader biotech index like IBB, Krystal's underperformed quite a bit recently.
It has. But what's interesting is, even with funding being tight for smaller biotechs, gene therapy companies like Krystal are still getting attention. Regulatory wins are favorable. M&A is always a possibility. And the real potential game changer, I think, is if those respiratory trials read out positively, CF and ATD.
That would change the story completely.
Totally. It shifts the narrative from Krystal launched one drug to Krystal has a platform that works beyond skin. That could completely re-rate the stock, open up much bigger markets.
So key things for listeners to watch then. European launch updates coming soon.
Yeah, September and December updates on Europe, Japan's pricing decision in Q4, and then those big ones. the CF and AATD interim data before the end of the year.
Those feel like the real inflection points that could change this cautious mood.
Absolutely. Okay, let's shift gears. Time for our This Is Not Financial Advice segment. The outrageous but plausible idea.
Right.
Looking at Krystal, that market reaction to the Q3 guidance, it really feels like throwing the baby out with the bathwater. A 13.7% drop after the call. Heavy put buying. That just screams short-term panic to me.
Okay, so if you're playing contrarian here, what's the pitch?
The pitch is a contrarian bet looking out 12, maybe 18 months. I think the market's got tunnel vision on 1/4 of expected seasonality. It's ignoring the big strategic moves, global expansion into high-margin markets, Europe, Japan.
And the pipeline.
And critically, the near-term pipeline catalysts. CF and ATD data before year-end. If either of those shows positive molecular data, it validates the platform way beyond dermatology. That unlocks potential multi-billion-dollar markets that just aren't in the models right now.
So how would you structure that hypothetically?
Okay, purely for illustration, remember, not advice. But you could consider buying Krystal shares, maybe around these recent lows or lower. And to maybe juice the return or lower your cost basis, you could look at selling some out-of-the-money puts, say expiring Q1 2026, strike price well below where it is now.
So collecting premium, expressing confidence it won't totally collapse.
Exactly. Then maybe use some of that premium you collected to buy some long-dated calls, maybe slightly out of the money, expiring mid-2026.
Capturing the potential upside from launches and pipeline news.
Right. You're basically trying to sell the market's short-term fear to help finance a longer-term, higher conviction bet. A bet that Krystal transforms from this single product story into a multi-indication platform powerhouse.
Bold.
It's bold, yeah. But the setup short-term pain versus clear long-term catalysts, it looks like a compelling risk-reward if you have that multi-quarter patience.
Okay, fascinating perspective. And that wraps up our deep dive into Krystal Biotech's Q2 2025 earnings call. We've hit the strong Q2 numbers, the market's somewhat puzzling reaction to the Q3 outlook, and that really compelling long-term picture with global expansion in the pipeline.
And just a reminder for everyone listening, this conversation is purely for informational purposes. It is absolutely not financial advice. Investing always involves risk. Please always do your own homework and talk to a qualified financial advisor before making any investment decisions.
Absolutely. We hope this breakdown gave you a clearer, maybe more nuanced view of the Krystal story. What stood out most to you as you listened? Keep digging, keep asking questions, keep learning. Join us next time for another deep dive into the numbers and narratives moving the markets.